Hey everybody, my name is Vojchehoske and welcome to the Real Estate Classroom channel. And in today's video, we're going to discuss a concept called title insurance. Now, if you have not watched the title insurance sister video, Abstract of Title, please do that first. And I'm going to leave a link right up here in the upper right-hand corner of your screen. I highly suggest you watch the video on Abstract of Title, then come back to title insurance, because I think what it'll do is help you with the learning process and understanding these two concepts. All right, so coming up, title insurance. All right, in today's video, we're going to discuss a concept called title search and title insurance. Now, what is the difference between title insurance and, let's say, an abstract? You went back and watched that video, Abstract of Title. So what's the difference? Well, the basic difference is an abstract does not guarantee good title, but when title insurance is issued, there is a guarantee or an indemnification of good title. Now, again, when does all of this happen? For illustrative purposes, understand all of this is going to happen prior to closing. So the buyer goes out, finds a home, they put an offer in on the property, they get it accepted. In that period between contract and close, there are a lot of things going on called due diligence. You know, they're getting home inspections and septic and well inspections and those type of things. Well, title is also being researched. And remember, title is ownership, and someone is doing research about the ownership history of this property, just like we talked about with abstracts. So that's called a title search. So someone is going to order a title search, and just like the abstract, it'll be a person that's going to go back and research the ownership. They're going to make sure that there is no liens and encumbrances and those types of things against the property. And then once the search is done and it's been deemed satisfactory, they issue a title insurance policy. So that is kind of the process from A to Z. All right. But what is title insurance specifically? I got the definition on your screen. Title insurance is a form of indemnification. It's an insurance policy that protects the mortgagee, key term. Don't forget, the mortgagee is the lender, and the buyer from financial loss sustained from defects on title to a specific piece of property. The most common type of title insurance, now there's more than these two, but these are the two that you need to know for your real estate exam. There is the mortgagee's policy, which is the lender policy, and then the owner's policy. All right, so what is the process of obtaining title insurance? Well, we discussed part of it already, where someone is going to do a title search, meaning it's just a history search of the property to identify the previous owners, to find out if the current owner is able to give free, clear, marketable title to the buyer. It's going to list any instruments that's been placed against the property that may impact or put a cloud on the title or place a defect on the title. And then it's going to list those things out. Now, a title search, that's what we just discussed, is done. And then an abstract of title is generated. An abstract of title is the summary report of the chain of title. And don't forget, the chain of title is just the history of all the different owners and instruments that have been placed against the property. So that summary report is called an abstract of title. And don't forget, the title search that's being done, it identifies things that impact ownership or title, such as liens and conveyances and deeds and mortgages and easements, and actually even lawsuits that have been filed, particularly like divorce cases because of the marital interest in most states. All right, so once the report has been done, there's going to be, and it's number 2, a title commitment, or sometimes called a title binder, that is issued. And that title binder, that title commitment, is going to have different sections, and we're not going to go into detail, but one thing you have to understand is it's going to identify the current owner, it's going to identify the current liens and encumbrances against the property, and then it's going to have exemptions. And those exemptions are going to say, basically, we are not going to issue title insurance that's going to cover these specific items unless they are taken care of prior to closing. So for example, current mortgage. The current mortgage that the current owner has will have to be paid off. Otherwise, this title insurance will not cover anything that results from that. So that's what it is. Number 3, it protects or indemnifies against loss due to defects on the title, or what we call clouds on title. And basically, it just ensures that the buyer is going to get free, clear, marketable title. So that's what a title commitment or a title binder is. All right, so specifically, what does title insurance insure against? Now, there are 2 policies. Now, there's more than 2, but there are 2 that we have to know for the purposes of this video and the real estate license exam. There is the owner's policy, and then there's the mortgagee or the lender's policy. Now, let's talk about the owner's policy first. Number 1 is the owner's policy is for or insures up to the purchase price. All right. Number 2, it's a one-time premium that's paid by the seller. Remember, the seller is the current owner. That's the owner policy. The buyer can actually get a policy if they want to, but here we're just talking about the owner's policy. And number 3, it protects against things like forgeries. So if the documents were forged, or there were incompetent grantors, there was a defect or something wrong with the document when it was being prepared, or did delivery actually happen? It protects against any unknown errors that may pop up. It protects against any kind of misfilings of documents. So if the title company knew, for example, about a tax lien when they were doing the title search, but they missed it and they didn't pay it, pay it off, that would be a misfiled document. And then community property issues. That's why title companies and escrow companies really want to know about the person's marital status and their marital history, because of that marital interest that so many states require. That's what the owner policy is going to cover. So if the buyer closes on the property, let's give you an example. The buyer closes on the property, and then let's say that the escrow company that did the research missed the fact that the ex-spouse, the previous owner's ex-spouse was supposed to sign, and now the ex-spouse is making a claim, that the new owner would be protected under title insurance. What about the mortgagee's policy? Remember, the mortgagee is the lender. Well, number 1 is this insurance policy only insures up to the amount that's borrowed, which is always different than the purchase price. Because think about it, the lender isn't interested in what the purchase price is. They only want to insure the amount that they borrowed. Okay? Like the owner's policy, it's a one-time premium, and it's paid by the borrower. The lender doesn't pay for this policy. The lender's saying, if you want me to loan you the money, then you're going to pay for our title insurance. So the borrower pays it. And then it protects against all the same things that the owner's policy does. It protects against forgeries, incompetent grantors, defects in doc prep, unknown errors, misfiled documents, and community property issues, as we discussed. But the mortgagee's policy is going to be what we call expanded or extended coverage. And again, that's a term of borrowing the money. The lender or the mortgagee is saying, borrower, if you want my money, not only are you going to provide us with title insurance, we want the expanded coverage. And the expanded coverage covers things like mechanics liens, adverse possession issues, encroachments, and so forth. Okay, so what doesn't title insurance cover? Well, number 1, it doesn't cover any existing encumbrances, such as easements, current taxes that are due, deed restrictions, known heirs, those type of things. So remember I said in the title commitment or the title binder, there's going to be a list of exemptions or exceptions. Those are things that the title insurance will not cover unless they are corrected prior to closing. That's what we're talking about here. So prior to closing or at the closing table, the escrow or title closing company is going to make sure that those current taxes are paid. They're going to make sure that all the grantors sign a deed conveying title properly. They're going to ensure all of those things are done, so then the title insurance will kick in. All right, they don't cover known defects against. So for example, let's say that there was an error that was known, or better yet, let's say there was knowledge of an ex-spouse and no one did anything about it. They would not cover that because it's known. And then zoning. Zoning changes all the time. The biggest one I would tell you here is if this property is zoned industrial and it's illegally being used as residential, so the property's use is not compliant with zoning, title insurance is not going to cover that. So that's what that's what it means. All right, that's title searches and title insurance. Now, if you have not watched the abstract of title video, I highly recommend it. It's right here to my right. Click on that box and take a look at that video. If you haven't subscribed to the channel, please do so. I'd appreciate it. Click the little circle to my left and make sure that if you have comments or questions, you put them down below. All right, guys, I'll see you in the next video.